Welcome everybody back to Potentialization, and we're really fortunate to have Steve Conley with us today, founder of the Academy of Life Planning and more. I met Steve some years ago now. What I want to do, Steve, in case you share this with people you know that might not know what potentialization is, I've been a software engineer for many decades, a long time now, but was always interested in the bigger picture of life, what's it about and where we're going. So my dream was to put my software skills to build a platform in the end to try and help as many people as we can. We're getting close to having something usable now, which is exciting. We potentially could disrupt the psychometrics market, that kind of thing. We've got an engine that can put surveys in, process the results, produce the graphs, do all sorts of fancy things. But the aim is to expand it into all sorts of things that will help an individual reach their potential, which obviously very aligned with the kind of things you do. So I was lucky to meet you all those years ago in Manchester. I know you've moved since then. You're not in Manchester so much. So that's me, that's potentialization. And we actually met through my interest in one of the local groups in Manchester that you were attending as well. I think it was emotional intelligence and NLP, wasn't it? That was right. All those years ago. So would you like to introduce yourself as well?
Yeah. So I think when we met was at the beginning of the Academy of Life Planning business, basically. So I'd been a kind of big cheese in the city prior to that. I was head of investments, HSBC, RBS Group, Santander, Life in the City. So kind of banker background, but not a banker values is the way I would describe it. So I felt that my kind of value alignment was not the same as my colleagues, and where they kind of were pursuing bonuses and profits for shareholders, I kind of was on a different trajectory.
Can I ask them, was there always that from the start? Did you always feel a little bit out of sync with the industry?
Yeah, I was like always a bit of a maverick that they tolerated because my projects were successful. So I kind of was very influenced by Stephen R. Covey, The 7 Habits of Highly Effective People, and the 4th habit, which was about win-win scenarios and how to develop a compelling proposition is a win for your business as well as a win for consumers. So I was always a consumer champion looking for opportunities. And I believe that win-win scenarios delivered massive profits for the business, but massive value add for clients and consumers. So they're great leaps in what was available to consumers. So they had to keep hiring me from 1 year to the next. But I was kind of a bit of a thorn in the side and irritation because it was always consumer first. But it really came to a head in 2011, 2012, when the industry was going through, the financial services industry was going through the retail distribution review, which was where there was a shake-up in the industry. They were decided to scrap commissions where financial advisors were commission paid and have everybody raise the levels of professionalism. And I mean, what actually happened is they just renamed commission advisor charges. It never disappeared, and it's still there, still to this day. But at the time, the bank decided it makes a lot more money on loans and mortgage interest. I mean, they're charging 52% on a interest per annum on a bog standard loan. They tell you it's 7%, and then you apply for it, and then they do some kind of underwriting, and then they tell you, oh yeah, you can provisionally accept your loan. Oh, by the way, the interest rate's 52%.
So sorry, I'm not even sure I'm hearing that right. 52.
Yeah, 52%. Yeah, standard offering for loan. Credit cards are 27, 28% interest, and you look at the margin between that and the Bank of England base rate, you get an idea what the profits are for these banks.
Yes.
Lloyd's today said they made a loss. I can't understand how you could possibly make a loss. but it's basically what they mean by we made a loss is after we've taken all our bonuses out of the pot, there's not much left for shareholders. I think but it's a different world. It's what I say is what you see written on the lobby walls is not the same as the conversation that goes on
So,
behind closed doors in the
who did you
boardroom.
finish? Which bank were you with at the end?
HSBC for 5 years. I was head of
Okay.
investments for 2007, I think it was, in 2012. Yeah, 5 years.
That was UK HSBC.
UK, yes.
Yeah.
I was part of the global network, so we used to go I used to go to Hong Kong and see the guys there and stuff like that.
Yeah.
And, they say, there's a global kind of theme to.
Yeah.
So the things I launched were launched to 26 other countries. Became market leaders in all countries, sort of thing. That's what I did. That's why they kept me on. But we fell out of love when the RDR came along, and I'd come along with the biggest problem with the bank, or all financial institutions, is about trust. According to the world's largest PR company, which is Edelman, you do something called the Edelman Trust Barometer, which measure the trustworthiness of all institutions in all markets. And at the bottom of the pile, the least trusted of all organisations is the financial services industry. I think they may have lost the bottom spot to the internet industry. They kind of in the last year or two, but it's influencers, scammers, and all that sort of stuff. But
Of course,
they're
yes,
always
all these, lots of crypto scams, all sorts of things
yeah,
popping up on the internet. I can't remember when you told me this, but I still tell people even now that you told me one of the issues was that many years ago, people would go to the bank and there would be a bank manager.
Yeah.
And they'd sit down, have a conversation. They would look after them, work out what was best for them. And the bank, the ordinary person on the street they'd have an average job. They go along to the bank and they would trust the bank manager to say, well, what should I do with my money? And the bank effectively was managing a lot of their free cash or what they might invest, or etc. Now, if you go to the bank, there isn't a bank manager. There's hardly anybody to talk to at all, isn't it? It's difficult to even talk to anybody. So that's a major shift.
Yeah, that's right. You kind of get into the bank and you kind of ask to speak to the manager, and some 20-year-old would come out and talk to you. I mean, it's nothing wrong with 20-year-olds, but they kind of they weren't the same, and they also were incentivized basically to sell products. So what you used to have to do when you were in the queue, if you came up to the queue, just wanted to pay in a check, you kind of give your identity and it pops up on the screen. Oh, you've got to talk about some insurance sell them some insurance while you're talking to them. So this is with the bank manager, in my time, in the latter years of my time, they changed from the person in the room who, you get a cup of coffee and you kind of sit around and talk about everything, to being someone who's like, you pop up digit on a screen, they're going to sell you some, they've got to talk about the latest product, and they're on, numbers. They've got to make so many sales in the day, tables and all this sort of stuff. And it's just ridiculous, the whole thing. But what happened was I came up with a project called the Trusted Advisor Project, which was I wanted to change it. And I thought a win-win for the bank would to actually have the financial planners become trusted. So I did some training for them and showed them how to plan the client before they plan the money, and be a bit like the old bank manager, listen to people and then come in with things with no agenda to sell products or anything.
So was this a trial with a few
It was a
of them?
trial, yes. Yeah,
Okay.
so it was a dozen planners, 6 from Canary Wharf branch and 6 from bank branch in London. They're called executive IFAs, so kind of the more wealthy clients. Clients were delighted with the outcome. They said it was the best conversation they'd had in 25 years since the old bank manager, I guess.
Wow.
And they were happy to put all of their business with the bank. So the sales went up like 8-fold as a result, but the clients were 8-fold happy because they felt after again. And so then the banks decided under the retail distribution review, instead of going ahead with that project, that they decided to sack everybody instead. So they laid off all their bank advisors. So the bank assurance advisor disappeared from the market overnight. And I said, well, made the wrong decision because this model is more profitable. But they made the decision based on the past, which was the product selling people had been what they called a zero-sum game. They'd what they'd made in profits, they'd had to pay out in compensation and redress payments and administrating reviews and things like that. It'd just been no profit made in the long term from the way they used to flog products, which I could have told them that. But that wasn't the model I was proposing. It was 8 times more profitable, and it was focusing on relationship with people and helping them with the problems without an incentive to sell products. Anyway, they decided that it was going to make more money from loans at 52% interest and credit cards at 28% interest, particularly when the interest rates fell down, and we've been at 10 years at a they're going back up again now. And maybe they're going to start getting back interested in the wealth market again.
It's hard to believe that in the long term they could see that as a sensible way forward, because they're obviously going to lose trust, aren't they?
Yeah. It's they think that people are deceived by the lobby walls and the the horse adverts on television.
Yes.
So the lovely banks. Nice people.
But of course, they are partly true that some people that don't investigate, that don't look for themselves, they are deceived by some of those things.
Yeah, absolutely.
So,
I mean, that's why they spend so much money on it. But it's it's the customers' money they're spending on all these millions of pounds of adverts and stuff. A good advertising campaign that you see typically on the television on the bank probably costs about £3 million.
Wow,
just an idea.
Huge amount of money, and of course that's all being funded by those high interest rates.
Yeah, it just goes on the expenses.
So it becomes a vicious circle, doesn't it? That they can't see a
does.
way out.
Yeah, but the way out, and I proved it time and time again, was a win-win scenario. They should be looking for win-win scenarios, not win-lose scenarios.
And of course, from a wider context, many business people now talk win-win-win. It's not just the customer and the company, it's the environment and the bigger situation. If the bank can't even get the win-win, never mind the bigger picture. That's
absolutely
scary, because banks are a critical part and a large part of society and the economy.
Yeah, so there's now, since 2006, in the Companies Act in the UK, directors of companies have a duty to consider the impact their business has on stakeholders of the business. And it defines stakeholders as, like you say, it is the shareholders, it is the staff, it's the customers, it's also the community and the planet. So these are things that are now necessarily included in the duty and obligations of directors of UK companies, but it seems to be missed.
I have to ask an obvious question. How would anybody measure that at the moment? How would they be held accountable for it? Have they actually got any way of practically taking that into account?
Yeah, so there's a measure. So when you're looking at financial return of a business, this is called a return on investment, an ROI.
Yeah.
And there's a new measure that's come out, which is called SROI, which is a social return on investment. And it kind of is a process of looking at the impact the business has on society and on the environment.
Is that a totally separate measure from the standard ROI?
Yes.
So they've got to look at both of those in tandem.
Yes, ROI and SROI is a kind of reportable piece now. You can quantify the social return on investment. So it is a quantifiable and measurable piece. And we have a framework for measuring that at the Academy called Logic, which is you set out what it is you want to achieve, what impact you want to have, and outcomes that you want to have, and then you set up a measuring system that then enables you to quantify that and report on it and report your progress to it. So, but this is only a recent kind of
Yes.
evolution. So
A very loaded question for you in that respect. Do you think anybody that matters in the banks believe in that?
Well, what's happening is this. So everyone's kind of done their environmental, social, and governance reports in their returns that get lodged with shareholders and the annual report and accounts, and they're all kind of wonderful environmental and social kind of. But what the regulator has been doing is accusing them of greenwashing.
Okay.
And there hasn't been, it's just kind of a self-report. So the businesses have been reporting on their own progress towards their ESG goals, a self-reporting, but it's not. There's no independent verification of their report. So there is now improving. So all the time is improving regulation to make it make the reported findings, standings of the organisations more accurate and properly reflecting the real nature of the organisation rather than what they want to report. So it's a moving piece. It's improving slowly and gradually. Change is happening for the better, but it's a long-term process, which is interesting because that's really why I set up the academy. So I do two things. I'm a volunteer for the Transparency Task Force, which is a collaborative campaigning community to try and improve the industry, restore trust and confidence in it. So I do that. But we talk to MPs and we talk to regulators and people in positions of power at HMRC and Treasury, etc.
Now, I've seen that transparency on your LinkedIn or wherever.
Yeah.
But I wasn't quite sure what it was. So is that specifically the finance industry?
It is, yes.
So it's not wider than that?
No.
Because obviously I think transparency is a vital, I mean, if you look at politics, all sorts of things, it's...
yeah.
So this is very much focused.
So last week we marched on Parliament. I don't know if you saw that. It's called the Enough is Enough, carrying coffins around Whitehall and Downing Street and things. Basically what it's about is because of scams and scandals, the regulators turning a blind eye to what's going on. There's the government are turning a blind eye. So financial crime is 40% of all reported crime in the UK, but the amount of police force that allocated to investigating is 2%.
So when you say financial crime, you're talking about financial products, online, etc., as opposed to just literally stealing somebody's money out of the house. It's
stealing people's investments and pensions and savings and scamming people. I mean, this is the 40% of all financial crime is reported, but then you've got there's exploitation that's not classed as crime on top of that. So you've got people saying they're taking 1% of your money every year when they're taking 4%. And the regulator knows this, but they're not doing anything about it, or saying anything about it. And this is what the march was for, the campaign was for, because it's enough is enough. We've had enough. The coffins were representing the people who've been, a bit like the post office scandal. There's many other similar scandals that are orchestrated by the government or big institutions where people have lost their life savings and committed suicide. So this is why.
I'm a software engineer, and when I saw what was happening with the post office, I don't know, a few months ago.
Yeah, that's right. Yeah, Horizon.
To me, it's completely unbelievable that there weren't a significant number of people that it was obvious what was happening, because when you're building software, there's got to have been various people at various levels deliberately hiding it. And maybe they kind of pretended at some levels they didn't know as much as they did, but there's got to have been some people very, very actively hiding things. So I'm really fascinated because when you said The naive bit of me that wants to believe the advert or whatever it might be, you say that they advertise they're taking 1% of your money, but they're actually taking 4%. But that
Yes.
just seems completely unethical for a start, but it ought to be completely illegal, and somebody does some. So how does that actually happen? How do they get to 4% and nobody takes any notice?
Well, the rules specify what elements, so your investment product, what elements have to go and be reported on the documents. You get a 30-page document, and on page 29,
Okay.
might take you small print that take 1% out. And what they're talking about is an explicit charge that they take.
Yeah.
But there's a lot of hidden charges inside your investments, so they don't report trading costs where they're buying and selling investments as a cost. If they lend out your holdings shares to another company, they're getting income. They're not declaring that. There's loads of things that they miss.
Yes.
Also, they might be talking about only an element of the fee. They might be, so an advisor might be talking about, I'm only taking 0.5% to your
Yes.
savings, or 1% out your savings, not mentioning that the platform's also taking 0.5%, the investment manager's also taking 1%, and that etc. The product provider is taking 1%. But the thing is that you've got to remember, after inflation has been taken into consideration, say inflation's 3% and your investment was returning 7%, your profit is 4%. Now, if the total charges they're taking out is 4%, that means they're taking all your profit.
Yes.
They're only telling you they're taking 1%, which sounds like a very small amount, but it's actually 25% of your profit that they're telling you about, but they're not mentioning the other 75%. So
I'm trying to draw on the screen. I'm not used to it going the wrong way. But of course, they'll show you the graph going up as your money grows. But of course, that's perhaps ignoring inflation and what we say.
Exactly.
In the
Yes.
end,
So it
you're
ignores.
going to end up with no more.
Yeah, it's a zero-sum game again.
Yeah.
So what they tell you, so they'll show you a graph going up, but that hasn't taken into account inflation. So you've got to have what they call real returns, which is the amount of money you get back after inflation. I mean, the real return on a savings account is negative. So when you give your savings to a bank or building society, and they're giving you 3%, but the inflation's 4.5% or whatever, the real return is actually going down. You might as well, I don't know.
And even the inflation, I don't know very much about this kind of stuff, but there's different bits. Inflation's not really just one number, is it? Different things are going up at different prices. House prices are going up at different rates. So it's quite possible that many people, actually, the inflation rate's higher than what we see, depending where they are, when they spend their money.
So they keep giving you a different measure depending on what story they want to tell you. They'll talk about RPI or CPI. So they basically retail prices index includes things like housing costs and things. And if they feel that that's going to give you a higher number, they'll talk about CPI, consumer price index. So they'll give you different. So it's all spokes mirrors, lies, true lies, and statistics. But this is all comes down to the mindset of the people you're dealing with in the organizations. And this is one of the things that I wanted to talk about today was about mindset. What I mean by that is the kind of it's what I call soul ego dynamics. So it's if you think about the human development journey and where we are on it, we kind of most people kind of living unconsciously about their true nature in the way that they think that they are what they think, what they feel, what they see. They're living in this kind of ego, and it's all about them and things like that. Most people, most of the time, are like that. But then, as we evolve as humans and we grow and we age and we live with experience, we move, up the stages of human psychological development and start to realize that it's not all about me, and it's about we. It's about us, and it's about we're here collectively, and we can collaborate and we can really bring about. And that kind of happens as we age and we develop and we mature as individuals. Unfortunately, the people in the organisations that we're talking about are the people who you've also evolved in their levels of consciousness and really are very materialistic and selfish and self-centered. Unfortunately, it's the majority of people, and we kind of live in a democracy, so therefore they're in the positions of power and influence.
And that's kind of self-fulfilling, isn't it? Because these jobs pay a lot of money, attracts the people that are just interested in money.
Yeah. Yes,
And
that's
so it's
right.
a hard cycle to break. So I guess that takes us back to the transparency, doesn't it? That if we could see what was happening, we'd have more chance of putting pressure on the system and changing it.
Yeah, what I was talking about on the transparency is, and you've seen this with the Post Office Horizon scandal, is change takes 20 years. At least. So that's what they were saying. I was volunteering for these, and I was going on marches and leading the market integrity team, presenting to Parliament. And they say, you do realise it's going to take 20 years for this to change. Why not change in my lifetime if we carry on doing that? So
Yeah.
I thought, well, okay, I'll kind of do that. But what I learned, and this is what I learned as a proposition architect in the banks, is how to bring about market change. Is you take a bottom-up approach and you launch something into the market that's very innovative.
Can I go back just for a second in terms of
Yeah.
20 years? Are you saying that the banks are saying, look, we've got all this big architecture, there's lots of processes. Are they saying that it takes 20 years to change the system? Or is it people's, because I also know as well, some people say it's their attitudes and the way that they've been brought up and got used to the way they deal with the bank or whoever they deal with, etc.
So what we're getting now is you see it in generations. So the millennials and the Gen Zs are very socially conscious, aware, and they're much more evolved in consciousness than the baby boomer generation, where it was very different. So it could be, we could be waiting till the millennials and the Gen Zs are in positions of power and influence before we really see any significant market change. So it's a long time coming.
I was going to say, if the people with the power, the politicians that can change the laws, if they were looking to change it, that could force some of the changes through. But they're part of the same generation, of course.
They are part of the same generation, and it's a democracy. They're voted by people. If the majority of people are kind of at the lower stages of human consciousness and development, then when it comes to a vote, they're going to vote for people like them. That's what they do. And so the people in positions of power who are elected are kind of also of the same ilk,
And of course, here in the UK and the US, we've got very much polarized politics, where it's very hard for smaller parties to have an influence. Perhaps it's a little different in some of Europe, but to break into politics and policies is difficult.
Yeah, absolutely. So what we do, so I'm not going to wait 20 years to change the industry. I'm developing a trusted proposition in the market now. So because that's the way big change happens, there's a rebel business launches.
So grassroots, people engage, they can join and change things for themselves as part of a movement almost.
As part of a movement. So that's right. Yeah. So kind of movement economics is the way I would describe it. So quite disruptive in the market, saying, enough is enough. We're not going to let people take 4% per annum out of our life savings and tell us that would only taking 1%. So you see this with St James's Place at the moment, that they've been caught out now, having the share price has dropped 60% in a year. Yeah, so it's like they've had to set aside £500 million in compensation. We think that's the tip of the iceberg. What they're going to have to do, they give money back to people that they took but didn't deliver the service that they were.
I went to a network meeting once, and one of the presentations was somebody from St James's Place, but I didn't quite understand them. They're agents, aren't they? But they get
Yes.
lots of marketing material, and it looks fancy, and they say how we're going to really help transform your life. So they have a powerful message, but what you're saying is underneath that, it was actually almost abusive.
Yeah, so 25% of all financial advisors in the UK work for St James's Place. They kind of play that, we're a quarter of the whole of the advisor community. We're a big company, FTSE 100 company, although they're very likely to drop out the FTSE 100 with the share price being what it is. But it's that's always been the play, and you get glossy brochures, and the guy turns up in his BMW, and
Mm-hmm.
great offices and all this sort of stuff, and it gives you, but it's your money, so it's the client's money that's been spending on these posh offices and cars and suits and
Yes.
cufflinks and cruises and things that they go on.
I'm really torn by this because I think there's some complexity to it. That if you've got a successful business that's providing a good service, the people that provide that service should earn a reasonable amount of money. There needs to be an incentive to be part of good businesses. So it's a balance, isn't it, between, I suppose it's basically transparency. Are they being honest? Is
It's
it a fair
transparency.
profit?
Yes. So the consumer duty regulations that are now coming into the financial services market are about transparency. So they're saying you have to now be transparent. So the number two company, Quilters, reported today that they've had to appoint someone to review their charges. So they've been forced by the regulator to do that. So that's the number two now is following the number one. And, so that came out this morning that they've had to do that. So it's all the transparency starting to happen, but it's a very slow process. And yeah, they've been, taking more charges than people think for years and years. And they're now, because of transparency, consumer duty regulations coming in, they're having to tell the truth. And the truth is that they've been taking 4 times more than the value of the service they've been delivering, and they're going to have to give them the money they took. It's what we call fee for no service scandal. There was a scandal in Australia about 5 years ago where they had to return 5 billion Australian dollars to investors in Australia, and they almost sent some of the directors of the big companies to prison.
And of course, that 5 billion, if it had been sat in the customers' accounts compounding, some of that it will have been life-changing that they could have had, and life-changing that they've lost it.
Yeah, if you think about it, if you're taking 4% per annum every year for 10 years, you've taken 40% of people's life savings. For 20 years, you've taken 80% of their life savings. It's just 4% times 10 times 20. Now, that's the kind of.
I was listening to an interview with somebody talking about financial things a few days ago, and they were talking about how the guy that started Vanguard, the person that was being interviewed, written a book about it, and how that has somewhat changed the industry because this strange person came along and said, "Look, I want to do all these services, but I'm not going to get rich.
Yes,
I'm actually going to provide a fair service to the industry," and that has helped.
Definitely, yes. Basically what it did was basically brought out funds, index tracker funds, for 0.25%, where the industry was charging 1.25%. It doesn't sound like much difference, 1%, but it's a fifth. People were taking the richest people in most industries are financial professionals. It's kind of the best paid industry. You rarely see a poor fund manager.
I don't know how true it is, and you'll be able to tell us that a majority or a lot of fund managers who are supposedly actively managing, switching funds, trying to get the best returns, a lot of them get less than just tracking the index.
Yeah, absolutely. Right? So the Vanguard guy, I think it's Jack Bogle, his name is, and he's died now. His contribution was to kind of get rid of all of this. And he used to say that, I think there was a question asked about, there was a conference where there was people were boasting about their yachts on the harbour at New York. I think Jack asked where are the clients' yachts?
Yes, that's a good question. Yes.
So yeah. So but basically what happens, active managers, 99%, according to the Pensions Institute, 99% of active managers fail to beat the benchmark. So after charges are taken into consideration, the 1% that did so by luck. So you can't actually tell
So
before.
I guess that even the 1%, you measure them for 5 years and they beat it, but the following 5 years they probably don't.
Yeah. I mean, if you look at the Woodford scandal, Neil Woodford, and everyone thought he was brilliant and everything, and then he lost everybody's money. And it's just, and then now he's come as an influencer, and he's trying, I've got loads of tips and everything, and he's on there on social media now trying to sell his wares. And again, the FCA took 5 years to actually even caution him and done nothing, allowed him to be influenced. Meanwhile, there's about 600,000 people? There's a lot of people who've lost money basically as a result of his great fund and him being such a brilliant star manager.
There's a bit of a pattern here, isn't there? I mean, we're a little bit older than perhaps some of the people. Hopefully, there's younger people starting to be more aware and plan earlier. But I remember pension problems, Maxwell, all sorts of things.
Yeah, that's right. Yeah, it's not a problem. Yeah, Bernie Madoff, the pyramid Ponzi scheme guy,
Yes,
most trusted advisor. It was just a Ponzi. There's a lot of Ponzi schemes still around. Billions of pounds goes every year. It's massive industry.
And recently, I've been seeing the AI tools that can actually take a video of a well-known personality, and now, because what they used to do is they play the video and have this strange voice that didn't quite match, and they were quite obvious. But now, they can literally get it to mouth sync to say that person say whatever they want. And there's a whole batch of cryptocurrency scams where they say, if you send us your Bitcoin or whatever it might be, we will immediately within 5 minutes send you double back.
Yeah.
What I quite understand is how YouTube in particular, but some of the others as well, are not sitting on this much more because they're everywhere. I mean,
yeah, that's right. I mean, there is, again, it's slow. The regulator's slow. There is some regulations that have only come out this last month that mean that that if anyone who's going to advertise an investment on YouTube, or they have to be registered with the Financial Conduct Authority. But there's lots of problems about that because so you can get registered. So there's the Financial Conduct Authority changes this month. There's another change that happened this month with Companies House. So now, as a company director, you have to prove who you are, that you're a real person. It's incredible that all these companies that you've been able to set them up, and there's never been any proof that it's a real person setting up the company. Anyway, they now make a lot of these scams are fictitious companies that are set up. I've had my company cloned and scammed, and someone pretended to be me. They even had a passport photograph and a passport made up. There was Steve Conley. He looked about 20 years older than me, so anyone knew it from social media. But he set up a company, and it was a scam. So it's just its biggest crime by far in not just the UK but in all developed markets. The way I see it is that London is the crime capital of the world in financial crime, and the regulators seem to turn a blind eye because they're worried because they see the financial industry as being very important to the UK economy, and they don't want to embarrass people in the city. They don't want the traders moving out to Singapore or Hong Kong or Europe or whatever other country.
But that seems very strange. Surely, if they cleaned it up, it would get better. Wouldn't it be more trusted?
Well, it's a big, this 4% that they've been taking instead of 1%. A lot of that goes into government coffers, so it props up the economy, makes the GDP look good and stuff. So, unfortunately, the government are kind of beneficiaries from this, So maybe take the St James's Place scandal, 25% of the market, that probably accounts for 25% of the fee income for the Financial Conduct Authority, because they charge their fees
Okay.
based on what the advisor remuneration is. They take a percentage of it. So they've been overcharging.
And of course, the national debt's going up as well. And the
Yeah,
interest that the government's paying in many countries, we're seeing inflation going, I think Venezuela or Argentina going crazy.
yeah,
Some people talk about these systems can't carry on like this forever. They're going to have to print huge amounts of money, so inflation's just going to get worse.
yeah. So I see things getting worse and worse in that way. But I think to me, that's what life on Earth is, and it has always been, and it always will be. It's like Earth lessons that we
A
get.
challenge.
The challenge, yes.
Yeah.
So it's never going to go away, and all we can do is, like, as entrepreneurs, we can try and make our little part of the world, make the world a better place, and so that's really what I've been doing, and I'm kind of trying to give power back to the individual. So I don't see it as a win-win scenario. A lot of what I see, I try to make it so by giving people. It's what I call democratization, which is taking what the rich get and making it available. It's what I call decentralization, which is taking the ownership of assets and control away from big institutions and giving it to individuals so that they can take agency and empowerment to manage their own money and not have people taking 4%
Yes.
per annum out their pots and stuff. So,
And of course, finance, if you've got money, you're free to do different things. So if you can get that right, I know if I went back 40 years and I knew what I knew now, and even £100 a month in the right place, saved up, compounded, etc., or different little bits of investment. And I'll say as well, actually, I mean, because the bit I've been particularly interested in the potentialization is understanding ourselves. And how we relate to the world, how we might look at it. So, psychometric tests, personality, emotional
yep,
intelligence,
yep,
all sorts of things. And one of the big dangers is that if you're highly agreeable or conscientious, one of the things, and I've done this, is look after other people.
yes.
But there's a very big danger that if you do that without understanding the implications, you end up being able to support people in the longer term and yourself far less because you
Yeah.
haven't planned it properly. So it's really, really important that we understand the balance in our lives and how we manage our money.
It's about balance and being. So I talked about people being self-enhancing and people being self-transcending, and I'm not criticizing the self-enhancing people because it's important that we all, at some point in the cycle, become self-enhancing and don't spend our time always being self-transcending, always thinking about others. It's about balance. Is a time for it.
Mm.
What the problem is if you're never self-enhancing, never thinking about yourself, only thinking about others, or
Yeah.
you're always thinking about yourself and never thinking about others. Those are the problems. And the balance is it should be a cycle. It's called the cycle from creation to manifestation, it's known as in different cultures. But it's about having a balance that sometimes you're thinking about others and other times you're thinking about yourself. And ever to manifest anything that you're seeking to create, at some point you need to think about other people, win for them. And then at some point you've got to think about yourself, a win for you. It's got to be win-win. And so that's really the way, the planning approach that I show with my clients, how to do that, how to think about. So one of the things we do is we say, what are you good at? And they tell us what they're good at, and that's the talent. And your purpose is to use that to help other people. And then if you help other people and you love what you're doing and it's what the world needs, and they'll pay you. And then you get the balance back. You get looked after by looking after other people, and it's kind of arranging that so it happens and not being one-sided all the time. So you can't go through life just being kind to other people and never being kind to yourself. And likewise, you can't go through life just being kind to yourself and never being kind to other people. Both result in poor outcomes.
And I think at the moment as well, we've got so much polarization. Some people say driven by social media, that it's almost as if it's a war between people that think we should look after everybody. Everybody should have basic income and be looked after, and nobody should be rich, versus the other extreme that no, if you don't work hard and make money for yourself, you don't deserve anything. And it's almost as if this path that you're talking about it's not an extreme. It's work hard, create, and share and look after other people.
Yeah. And it's probably different points in the cycle. So, I normally say that when you're focusing on one point in the cycle, then the next step is to focus on the next point in the cycle. So if you've been focusing on other people quite a lot, then the next step is to focus on yourself quite a lot. And if you've been focusing on yourself quite a lot, the next step is to focus on other people quite a lot. And that's quite right. So the polarization, if it's static, is destructive, but if it's cyclical, then that's productive. It can be productive.
Which is why I think I realized some years ago that for me is the key element of democracy. That we've got these two different forces in society that have got perhaps a slightly different focus, community versus individual entrepreneurial, but they take turns.
Yeah.
So we get the best of both over time, whether it's every 4 or 5 years or even 10 years. When it goes to such an extreme, the public start to see, well, we've had enough of that. It's gone too far. We need to come back the other way a little bit. So if people start saying democracy's failing and start criticize that we see in some bits of the US in particular, there's a real danger that we'll end up going down one polarization without that balance.
Yeah.
Which is what's happening, I guess, with the financial stuff, isn't it? That the transparency's not been there. So they've been allowed to run down one direction without any...
and I guess it might be cyclical, maybe, people get fed up of it being transparent. And because they've seen all the bankers have left London, and so they want to bring back some opacity. So the bankers come back again. I don't know. These things happen, and all I know that my little part that I play in it is just to try and move to transparency. And just help that way.
Well, I don't think necessarily transparency isn't a polarization. It's not an extreme. It's watching both sides. It's opening up what's happening so that people can see, are you actually working hard to earn that money? Is it fair?
Yeah.
If you're adding a lot to society, there's no reason why you shouldn't get that, because you're good at running a business. You're good at allocating the capital that is coming into it to make that work to add to society. And that's a useful thing for society, and that money will spread back out. But what you don't want is it to become so closed that it's still sucking in lots of people's money and abusing it, but nobody can tell. Or especially if it becomes ingrained in the psyche of that's what you're supposed to do, talk to your financial advisor. He can be trusted. So it's this expert thing, isn't it? Society can't function without experts. We need doctors that can do operations. We need people that can run financial institutions. But we also need that transparency and awareness to make sure they're not abusing it and going too far.
Yeah, I totally agree. I mean, the way I see it is I've taken my lead from the NHS. So the NHS have, they've been in a bit of a mess in the UK through the pandemic, and now you can't get access to a doctor's and you're waiting 8 hours in A&E and everything like that. So in order to address it, they're looking at something called the Patient Activation Measure, or PAM. And it's basically saying that 90% of people, 90% of the time, can look after their own health with the right support. And that support doesn't necessarily need to be one-on-one with a doctor or a surgeon. So you can now access support in your local pharmacy, for example, and or online and that type of thing. So, but in times of stress or change, you do need to see someone on a one-to-one basis. So that's then available to you. So that's kind of health service. And I've taken that in the wealth service. And I said 90% of people, 90% of the time, can look after their own finances with the right support. It's really only in times of stress or change that they need to see an expert on a one-to-one basis. So what I've seen is at the moment all you've had is one-to-one experts. You've not had the support for the 90% of the population who are underserved by the expert community. So
Because
really,
they
that's
only look after rich people, effectively, or
yeah,
wealthy perhaps.
they do. It's if you have
Yeah,
it used to be £100,000 or more investable assets, that's ISAs and savings. Then you could, that threshold's going up. It's more like 250,000 now, I think it is. So it's really the
yeah.
top 5% in society that really have access to the experts on a one-to-one basis, and everyone else is left to the internet, to TikTok boys and things like that.
Because one of the things that happens a lot is that there is a big gap, isn't there? You've got those people at the top, and then there's nothing. It's like you fall, and
Yeah,
then right down at the very bottom, you might get citizens' advice for debt stuff that most people
yeah,
wouldn't even bother talking to, but only when it's critical. It's
yeah,
like you go to the hospital when you're half dying, or
yeah,
uh, and it should be it's the wrong phrase to use here. It should be actively managed, not in that funds way, but in
yeah.
terms of our lives. And I think that's what you're talking about with life planning, isn't it?
Yeah, so there needs to be a service delivered to the mass
Yeah.
underserved market. And that's where the type of financial planning that the Academy does comes in, because you can deliver it to groups of people, you can deliver it in the workplace to all the staff, things all at once. It only requires one planner when you do it, where it's not, because it's not one-to-one, it's one-to-many, or what I call non-to-many, where you kind of record videos and let people watch videos. But it's not for people trying to flog products. It's all there's a wall between the advice and the product distribution. So this is not a problem that I'm asking the product industry to solve, because
No.
their solution involves selling their products.
And
It's
you talked about different generations of people, and I know when in various, I knocked on people's doors when I was just looking at politics a little bit, and there would be many young people answer and say, "I have no idea what they're talking about. I'm not never followed politics. I'm not interested." And I know that the same thing has been true with pensions for years. People don't start taking pensions seriously for a lot of years. That's a challenge. Is that changing with the new generations?
they've brought in automatic enrolment to pensions, so having to 8% of your salary taken out and given to the pension company. I'm actually not entirely in favour of this approach, because the pension companies are pushing for that to go up, to be doubled. They're
Wow.
pushing for that to happen to low paid people. At the moment, if you don't pay tax, if you're below then you don't pay the 8%. You want to take the money off the people who are low paid. And they also want to take money off the people under the age of 21. And so as soon as you start work, I think it's 18. I think. And I'm thinking this is the wrong thing. This is the wrong thing. What
Yeah.
we need isn't bigger pension pots with the pension companies. Well, the bankers don't need any more money. They've got enough. They've got
Mm.
£3 trillion of consumers' money. That's enough for their bankers' bonuses. What we need is different solutions, and the different solution. There's two things you need to address poverty. One is some savings, yes, but the main one is income. And what I want society to focus on is showing people how they can make income in their old age as well. So I
Mm.
kind of come up with strategies. I mean, people are getting made redundant in the 50s, and they don't get the state pension till the 67, 68. So this gap, and they can't, and because of ageism in the workplace, they can't get jobs. So they can't. So this is the issue. They can't have income.
And
So
this is
what
going to
I
get worse, isn't it, with technology, artificial intelligence?
it's,
We're
it's
on the
oh,
edge,
yeah,
yeah, of
yeah,
cars that
and
drive themselves, and huge levels of shift and change in the workforce.
yeah. So I was writing last week about something I read in the Telegraph of the weekend, which is about people in their 80s and 90s who have spare rooms. Uh, Home Share is a UK organisation which matches them with 20 and 30-year-olds who can't afford accommodation in the city. They do like 10 hours of cleaning and cooking a week, and they get
Mm.
peppercorn rent, and it's company, and it's good for the the older person on their own, good company for them. It's good for their well-being, and it's good for the youngsters. So these strategies don't involve any products, but they're financial plans to solve issues for the youngsters who can't afford accommodation in the city to go to their job, and the older people who haven't got enough money coming in and they've got this spare room. You can come up with some really great innovative solutions to solve the problems, and that's what we should be looking at.
So what you're saying is, if you go along to your financial advisor and you're 20 years old, they're trying to get you to enroll in, put more money in a pension. It's all products, it's all those things. So they're not going to be telling you, why don't you go and live with somebody who's elderly and got a spare room? I heard about that a little while ago, and some of the young people were saying how surprised they were, how fulfilling it was to be able to spend time with these older people, different experiences, learn about their lives, and found it actually quite productive.
Yeah, absolutely. It improves their knowledge and wisdom, living with people. So that, the glowing reports is from Hope share, about the testimonials are just amazing. So it's strategies like that. So I help people to find work that doesn't feel like work, from which they never want to retire, that can start in the 40s and carry on to their 80s. There's a London Business School have written a series of publications. It's called The 100-Year Life. And basically, people born today have a 50% probability of living till they're 100. They're going to, that means it could be working till they're 80. Because of, like you said, technology advancements and AI, and because of globalization, where people now through technology can do, from Singapore, they can do a job in Manchester and take jobs there. So these things means that we're not going to have a job for 40 years with a big pension and then retire at 60 and live. What's going to happen is we're going to be changing our jobs every few years because of advances. And we have
And
to
that's
be
if you have a job at all, because many people are
yes,
more independent. It
much more
started
so.
consultants, but it's actually more than that now. You're not just a consultant;
Yeah,
you're literally evolving as you go.
yeah. So there's like in London now, I think it's about a third of the population have second jobs and things, and kind of other sources of income. So what we try to do is create a portfolio of income opportunities for our clients, and so that they're resilient and they can, if they lose one of the income sources, it's not a problem because they've got other income sources they can develop, things like that. So this is the way that, but a traditional financial planner would never talk about income. That's not even on the radar, not in the toolkit. I've got nothing to talk about that. I could tell you a pension. That's kind of, so I'm trying to change that and say, well, actually, a holistic financial planner, which is not a traditional financial, can talk about income. I'll show you how to make income, how to make ends meet. We're going to talk about things like that. This is what the mass underserved community need to be shown, how to plan holistically and financially to survive in 2024, 2025, etc. That's what they need. It's not what they're getting in the market. So
no, I know the work you've been doing for a few years. Life planning has been with life planners, other life planners, helping them to make that shift to a non-commission based, advice based service. But it sounds as if you're shifting a little bit as well to actually trying to reach more people. So how would an individual, if they've listened all the way through this, we've been talking almost an hour, and they're really interested in, like, this sounds sensible to me, to make sure my life is aligned so that my money is organized. So I mean, you literally said, so you can do work that doesn't feel like work, that you can enjoy. How do they find you in through what respect is it? Because I noticed you've got the Academy of Life Planning. Is
so
that
on the Academy, Academy of Life Planning, there's a couple of kind of sub brands on that. There's Planning My Life, which is for the mass market that we talked about, which there are loads of free resources. But if you want the tools and to do the actual planning yourself on yourself, then there's a subscription of £19 a month on Planning My Life that you can get all the tools you need and all the support you need. It's that 90% of people, 90% of the time, can do their own, manage their own finances with the right support. It's the right support. It just costs £19 a month. But you spend that on lattes probably. so save if you cut out a few lattes and kind of do that with your finances instead. And it'll return much more than £19 in return on investment and social return on investment. If you're saving yourself from giving some financial exploit to 4% of your life savings every year, if you learn how to avoid that, then that's going to be more than cover the expense of £19. Anyway, so there's that. But there's loads. I have loads of social media channels where I've got a blog which probably got 1,000 blogs on it about these sort of topics. But
if I was going to say, if somebody's interested, it was what Plan My Life, is that, or is that
Planning My Life? Yeah, Planning My Life. Yeah, www.planningmy.life. Yeah.
And when they get there, is there a really simple way to just sign up for an email to make sure they stay in touch if they haven't got time to study it right now?
Sign up. It's free to sign up.
Okay.
And they don't have to buy anything. They can just sign up. Then they're on the mailing list and getting all sorts of free stuff. And then, if they do want to hire any of the equipment, then there's a low ticket. Actually, the Financial Education Library, which is a comprehensive source of courses on all the different topics you can think of on financial, that's £2.99 a month. So if you can't afford the £19 a month, the £2.99 there's an option on there to do the Money Fit Financial Education courses, where you do little 20-minute courses on emergency funds or credit cards, or there's some on crypto, and these are written by
somebody can sign up for the free email. It might have a piece of advice saying just watch what you spend on a daily basis. Don't have a coffee every day. So they've only got to have one less coffee in the week or the month, and they can afford that basic subscription, learn much more, and they're going to save
the £2.99 one. Yeah, that's coffee a month, and then for a coffee a week, they could have the full planning package and support. And access bottomless Q&A, all sorts of tools and stuff. So
if they make good progress, save money here, invest to start to improve their income, we're only talking about not having that coffee once a week now, because once it's organized, you're going to have more freedom, more income.
Yeah, I mean, what we're saying is one of the things you can do is just look through your bank statement, and you probably you've got standing orders going out that you're not using. You could easily just cross them off, and voila, you're already better off. So, I mean, one of the things I've got there, one of the blogs, is about 100 ways you can create another income. You got 100 little different ways of doing it. So just take one of those. And you sorted, you're in profit. So, but it's about planning your life, John. We've not spoken much about that, but it's about money is a means to an end, and the end is your well-being, and it's about establishing what that means for you, and then putting in place the financial architecture to support it, which is what the Planning My Life thing is about.
Sounds exciting. So the more people that can sign up, the more it will change the world, the more effective they'll be in the world.
Yeah.
Hopefully they'll go on and try and bring transparency to other industries, more people, more aware.
Yeah, so it can be introducing Planning My Life to employers. We're introducing it to churches as well, because they want to help eradicate poverty, because that's what the Planning My Life is for. It's to 60% of the world population is classified as living in poverty, and the way the United Nations says you address that is the method that we use in Planning My Life, which is you identify productive assets and you leverage entrepreneurial opportunities, and you create these sustainable income streams. It's not about products. Products will not eradicate world poverty. Income will. So it's not savings part, it's income. That's what we've got to focus on.
Because products are sucking the life out of you.
Yeah,
Income is about expressing your life, I guess.
yeah. So the products empty your pockets, and
Yeah.
income fills your pockets, and you can't empty the pockets of people with empty pockets. Is what I keep telling the regulated advisors when you can start trying to sell the products to people who can't afford them.
Because there's nothing
But
left.
there's nothing in the pockets. You know, we have the squeeze middle cost of living crisis. People have been taking and cashing their pensions to pay their mortgages, and it's just terrible. You know, we need to fix that. The way we fix that is giving people more money, not taking it away, not doubling the pension contribution from 8% to 16%.
And,
That's not
and,
solving the
and
problem.
real money, not just printing money for the sake of it to pay the interest. It's actively doing things that you believe in, you enjoy, to bring
Yeah,
real wealth to the world.
yeah.
Yeah. Exciting. Now, I don't know whether we've covered what you wanted to. Is
I
there
think
anything we
so.
should wrap up with, or any last
Uh,
words?
I mean, just to say, yeah, it's the way of the world, really. The world is what it is, and we kind of, you know, most people are not kind of uh, out to help us. We think,
Hmm.
particularly in the financial industry. So it's just to be kind of be careful. Um, Try to help yourself more. The thing I say is the best place to find a pair of hands you can trust is at the end of your own arms.